How's it going, you guys? Today is May 6th at 5:58 p.m. Eastern Time. Thank you everyone for your comments. I think I tried to respond to everyone's comments, and thank you for submitting all those tickers, and all of your feedback has been very, very nice. Keep it up, and let's do it. Let's look at SPY on the 180-day chart on the Thinkorswim platform. I have it pulled up right here, as always. And looking at the SPY trend, we talked about that SPY has been making a lower high on this chart, and that when we zoomed in on this current trend, right, we talked about this horizontal pattern that's been appearing the past few days, and this was the horizontal pattern. We have identified a resistance at the breakdown candle, a more near-term resistance around $268, while there was a support at the gap up area right here, which was situated around 261.38. And it's been bouncing off and hitting this resistance for quite a bit of time. Note that we also talked about a potential resistance, and this is the long-term resistance as shown by this circle made by this lower high and this gap down area around 271. And where does this converge? Well, we talked about this convergence around this area, right, guys? If you guys remember, I actually moved this circle a little bit to the right because in the past we said that it might hit this area possibly on Friday, right? But this obviously wasn't the case since we were on the downtrend. But on Thursday night video, we talked about this support. We identified a potential reversal over here right at the support. We said that this was a very nice candle to form as a reversal candle. And on Friday, we had a massive surge up. And where, again, do you think we are heading? Well, this circle is here for a reason. When the two lines converge, this is where the markets are generally attracted to test the long-term bearish pattern. Are we still in a bearish pattern, or are we going to finally reverse and get out of this bearish pattern and pull to a more bullish position? Well, we'll see in a few days, but in the next few days, we're looking at resistance around 268, okay? So that's tomorrow probably. And if we do go above this area, the next major resistance is around 271. It is no longer at 271 to 272. The resistance, as you can see, because we've been making this lower high, and as the days have progressed, the standard has become a little lower. It's 271 as the major resistance. So we'll see what happens if we do get to this area. So again, this is a more dangerous area as we approach this resistance, and definitely at this resistance area. So we will see tomorrow in the next few days. So let's take a look at TQQQ. You guys called out a lot of tickers. Thank you very much for all these tickers. TQQQ follows the NASDAQ, and as you know, the markets go up, TQQ goes up. Look at what happened, right? The red line's a 200 SMA. It's acted as resistance before. Once again, right, it pulled a little bit over, only to kind of get rejected. We might see something similar to this time around, especially as SPY nears to that resistance. We're close to those resistance areas. You know, this is not a good buying point for TQQQ, especially if you can imagine if you bought in at this area, right? What is your potential for profit? 3% maximum right now. Like, you don't want to take a chance, but your potential for loss, man, oh man, can it go down quickly, right? So this is not the time to go into TQQQ. Looking at TVIX, this is a more appetizing position at this point. Why? It's because we are at a support around 676. We've talked about this. We closed exactly at 676. And this number has been here the whole time, right? And this is not a magical number. This is just the number that the market told us that 676 was a support. Can you buy in at this point? Well, I would still wait for the markets to start pulling down, but regardless, TVIX, we're getting to a good entry position for TVIX. Note that volatility can still fall below the support. So even though we're at the support, we can still fall if SPY does make a more bullish surge up to the long-term bearish position. But you can see that we are holding the support right now. Okay, so that's what I'm looking at for SPY and TVIX in the next few days. Let's go through commodities really quick. So 4/CL does track crude oil futures. And we left off last week talking about this support around 67.42, a resistance at 69.36. And what happened? We left off over here, right? On these two candles last Thursday night, because we identified a reversal pattern here and then it went up. At the time, GUSH pulled down 5%. Recall Thursday night, GUSH, which follows crude oil futures, pulled down 5%. I was waiting for GUSH to pull up. Crude oil pulled up on Friday significantly, and GUSH went to 32, closed at almost $33. We'll talk about GUSH in a moment because this is really interesting because the pattern we've been talking about is playing out. Crude oil has broken over its resistance. So I told you guys, this is a consolidation pattern. This does not mean that it will come down necessarily and to invest in drip, which is the inverse of crude oil. This is a consolidation pattern at the previous resistance, which is now the new support. It's making new highs. And once again, we're making new highs for crude oil again. Now, we have broke through this resistance area. What are we looking for? We're looking for now a confirmation of this new support. If this just a false breakthrough, we can still see it come down, right, guys? As a matter of fact, I would like to see it come down a little more. Like we did break through, but I can see it going up. But at the same time, can you imagine some candles that kind of look like this? Can you guys imagine some? I certainly can, right? Something like this before it starts going up again. It might even go a little lower than that. Or it can start tracking down back to its support if this was a false breakout. What does that say for crude oil? Well, crude oil is obviously still bullish, right? Looking at GUSH, let's look at GUSH. We talked about a resistance for GUSH at 33.56, and then we have a support around 31.13. This has not changed for the past week and a half, right? It's been doing this. So when you guys looked at the uptrend on Friday, when we talked about the uptrend, we said if GUSH does manage to pull up, this is the time to go in. If you guys got in around 31.50, you guys made a lot of profit, 5% profit at that point. Looking at the 3-year trend for GUSH, we also talked about this making lower highs, right? But that if we just consolidate horizontally, we would break above this lower high. Look what happened. We broke above the 3-year resistance on GUSH. All right. We broke above the 3-year resistance. Now, what are we waiting for now? The only other resistance area now is this area, the resistance we just talked about, 33.47, which was the gap down area. Should we be able to cross over this area, we can see higher prices to come. $33, $34, $35, $36. Those all are not out of the question right now. Are we going to buy into GUSH right now? Once again, we're at the peak. I wouldn't go in right now because 4/CL could still make a false breakthrough, right? It can falsely break up before it comes back down. So if it does come down, we can expect GUSH to come to where? 31.22. What does that mean? Another potential good buying point. You know, this is just a repetitive pattern that we really, you know, there's not much to say to it. It's so obvious. Okay, so look at the 1-year pattern for drip. We talked about drip, which is the inverse of crude oil. Many people are still thinking of going into drip for whatever reason right now that does not make any sense. Boxes represent a breakdown of the major support. So this is the 1-year chart. Every time it's come down, it's break through the support. Every time it's breaking the support, it's keep coming down. Every time it breaks a major support, it keeps coming down. We've broken a major support again. What are we going to do? Well, right now we're doing some downward consolidation action, which means literally nothing as we catch up over to the 20 EMA line. But we can easily just get rejected and come back down. Once again, I want to show you guys that on the 1-minute chart, we went to $8.12, pretty much almost the 3-year low. It's not the 3-year low because we achieved it on this day, but it's pretty close to the 3-year low. Does that mean you guys should get into drip? I don't think so. Like, drip has been constantly going down as crude. What if crude oil keeps being bullish, right? taking a drip position is much more riskier than taking a gush position, even though we have a horizontal pattern on drip, right? Just looking at the 1-year trend, you guys can see that it can easily fall down than for it to go up. Is this the risk we're taking? I mean, that's up to you, but, you know, I like things that kind of both trend up, not trending down, even though we're at the support. So let's wait for that. Looking at other commodities, Forex/GC, which tracks gold. We talked about this reversal area last Thursday. We said that should gold start reversing, this is a good entry point for JNUG. Well, JNUG went up 0.5%. Should we see Forex/GC keep pulling up at this point, because this has been a major support? This is, again, a possible good entry point for JNUG. Right? So Forex/GC is showing a bullish pattern at a reversal at a support, and at the same time, looking at JNUG, let's pull the 180-day chart in. We can see that, right, we've had a support at 1372, and now we're back on the uptrend. So once again, the resistance is around 1620. Right, guys? So this is something definitely to watch. Just remember that we are a little higher right now. See, you guys can see that we're at the midpoint of the upper end. So are you guys going to get in now? It's a little riskier to get in now. But, you know, as Forex/GC keeps pulling up, we can see gold keep pushing up as well. Is this a surprise that this acted as a resistance area? Look at that. That was the previous resistance. It acted as a resistance on this day. I hope that was not a surprise this time around. So we can expect much of the same. Let me draw in this line. See, there we go. Okay, so it has to be, the line has to be completely horizontal, 0%. So there you go, JNUG, right? Looking at Forex/NG, which tracks natural gas. We looked at natural gas in terms of its, can it hold above the support? And it obviously could not. What does that mean? As it keeps moving down, we do see what kind of pattern, right? We're still on a downward trend. The support is around 2.662. I still expect natural gas to probably come back up and then continue to fall, at least back to its support. So this is just something to watch. And as this occurs, we talked about DGAZ as well. We could invest in DGAZ. And I said DGAZ last time. I think I said this on Thursday night. DGAZ was a potentially good, still bullish move. Always follow the trend. If DGAZ is pushing up or natural gas is falling, you should go into DGAZ. Are we going to go into DGAZ right now? Once again, I want to question your, if you do want to go in, your potential for profit is maximally 3.5% before your risk goes really, really high. Your potential for loss is even greater. So this is not a good entry point for DGAZ, but for those of you who are in DGAZ, you're kind of comfortable, especially if you've made a couple of, you know, a couple of percentage of profit. So you guys are comfortable because you guys have set a limit order where? Well, we talked about this, right? 2950, 2960. Just refer to the Thursday night's video. We talked about that. All right, let's get to the tickers right now. You guys submitted a lot of tickers, so let's take a look at YUM. So YUM is Yumi Brands. You can see that it came down due to earnings. Now we just need to look at previous trends, right? What happened when it came down to its earnings, due to earnings? It came down, did a double bottom, then started the uptrend. What are we looking for now? Come down, come to the 20 EMA, rejected, reconfirm the support, then get it go up. That's when I want to see. So what am I going to do? I'm going to set a alert below this line, right? So the alert is set up below this line. So should it start falling to this area, we'll keep a watch on this stock if it does start trending up, and at which time we can go into YUM. But for now, definitely not. It's way too risky as it's coming down. YUMC, Yum China Holdings. So again, this is the same story, right? We have earnings came out, which made it come down. We've come back to the 20 EMA. What are we doing? We're again trying to reconfirm that this is in fact a support before investing in. Actually, I don't even really like this trend. You guys can see that it's been making lower highs every single time. This is a downtrending stock on the past 4 months, and actually this is not something I would actively invest in right now, especially given this sort of pattern, right guys? This is not something because this is downtrending. So let's hold off on getting into this one. SIRI, I think this was someone who messaged me on the chat and said, okay, look at this one. This one looks really good. So I do agree that this one looks good, but look how overextended we are, right? We are extremely overextended. We are on the uptrend. I do agree with that. But again, I want to see it come down to the 20 EMA line at $6.51, kind of close around there, and then see it bounce off before we get any higher. This is just a little concerning to me because look how high we pushed. Yes, we kind of broke over the resistance, but I still want it to come down before. You guys can see that, right? On the 1-year trend, this was the previous resistance. We broke above. This candle kind of looks like this candle right here. And yes, it did keep going up, but that's risky. But look at what happened. We came down straight to the 20 EMA on the 1-year chart before it started going up. What am I looking for now? I'm looking for it to come back down to the 20 EMA before starting investing. So it's overextended right now. Let's not take the chance because stocks do not generally want to keep tracking higher and higher and higher without taking any breaths. ZG. Okay, so ZG, again, this one, you got to be careful because on the 180-day chart, yes, we are on the uptrend, but look at the earnings. That comes out tomorrow. So let's wait for earnings to come out, see what happens. And if earnings does make it go up, are we going to go in? Absolutely not. Look how overextended we are. If it makes it come down, are we going to go in? We're not either because we need, if it does come down to this support, we want to reconfirm the support because of this massive drop before going into this stock. I do like this uptrend, but we just got to see what happens tomorrow. Is it aftermarket? Aftermarket. Okay. Amazon. I love Amazon. Ah, yes, Amazon. So Amazon, you guys can see that it's been holding a consolidation pattern around 1560. Earnings did pull it all the way back up, and we're consolidating back at this 20 EMA line. This is not a bad entry point, but then once again, you ask yourself, what's the potential for profit? We know that the new resistance is around 1655. Your potential for profit is maybe 3%, 4% maximum, but your potential for loss is, look, 8%. I mean, or if it, comes down here, it's still 4%. We don't want that risk to reward ratio. What are we waiting for Amazon? We're waiting for Amazon to see what happens, right? Look at the volume going lower and lower. People don't want to invest at this area for good obvious reason. There's too much risk and there's too little profit. So you guys got to follow the trend. There's too much risk, too little profit. Let's not go into Amazon right now. We know Amazon's a strong stock. Let's wait until we get into a better price, or if it starts breaking this previous resistance, then let's reevaluate Amazon. Alibaba, right? Oh, okay. So Alibaba earnings came out, obviously pushed it higher. So what can we expect? If earnings pushed it higher, we're expecting some sell-on news in the next few days. Looking at this previous trend on earnings so what happened earnings here? So earnings, it looks like it pushed higher, then we had a major sell-off. Look at this, right? We had some horizontal pattern and we eventually dipped to the support. If you guys bought in at the earnings during this day, you guys, lost out because you would have lost a lot of money if you guys bought it. And once again, same story. We're right here. Look at this. Look at this horizontal line, right? We're pretty much near the upper end. Look at this. We're up near the upper end, but look at the bottom. The majority of the candlesticks are below this area. Are you going to start investing at this area? I hope not. Not right now. Not right now. Okay, OMER. OMER, I think you guys were talking about OMER at $16. Let's see. So $16 entry point is around here. So pretty much where we're at right now. Look, okay, so a couple of things, right? I do like this pattern. This pattern has been very nice, but what is the volume on this person? What is the volume on this little guy? 800. Okay, it's not bad. So I like this pattern, but I don't know, look at this catalyst, right? It surged all the way up and then we plummeted all the way back. There's some sort of catalyst or manipulation right here. But I do like this uptrend pattern. Just note that there are earnings coming up in 4 days and that what happened, right? Look, we caught support at the 50 SMA every single time. 50 SMA. Overextended, 50 SMA. We're really overextended. At least we need to come down to the 20 EMA or the 50 SMA before going back in. So let's wait and see on May 10th, see what happens before we start pulling up, right guys? Or we start buying into OMER. Not right now. PIRS. So PIRS obviously is in a downtrend. If you guys were trying to short sell this stock, I would agree with short selling, but okay. Let's do another case, right? Are we going to short sell this stock right now? So I feel like most of my answers are no. You're not going to short sell right now. Look how overextended we are. Short selling means we're going to buy on the high, sell on the low, and rebuy the stock in. We're not going to do it right now. We need for it to come back to the 20 EMA before possibly short selling. Are we going to buy into this stock? Obviously, we've gotten rejected by the 20 EMA so many times. With earnings coming up, let's not take a chance on this one either. That is just way too risky. Look on the 1 year chart. You guys can see it even better, right? Possible short sell, but definitely not no entry. Okay, looking at JCPenney, we talked about this many times. JCPenney has had this trend, right? We talked about it when JCPenney was consolidating at this area. We talked about it coming down the 20 EMA before it coming back up. We talked about it when it was consolidating at this area, and we said this is a potential support and where we can buy in. And then we finally talked about it here when we said this is a potential area we can buy in, but keep in mind that the green line has been acting as a resistance. Once again, we're at the support. Is this a good buy area? So the answer once again is no, it's not a good buy area. We're at the support, but this time you guys need to take a look at this trend, right? This trend means we have been on this descending triangle trend. At some point, we're going to make a huge move down or a huge move up. And as a matter of fact, we have earnings coming up in a week and a half. We're not going to take a chance on this JCPenney anymore. It does not look appetizing anymore. Let's move on to something different. We're done with JCPenney, at least for now. Last one I want to go over is Square, which is the one that I was in. Recall that I was in Square around, so my Robinhood account, I was in Square around $46.50. So on Friday, I sold Square at $49.44. So here it was. So what I realized, so looking at the day chart, is that you guys see this double peak, right? When it was consolidating at this area, first of all, this was the first peak. We're really nearing this peak at this area. We couldn't cross higher. We did a double peak here. This is when I sold it, $49.44, when it started dipping. So I made around $2.50 per share on my Robinhood account. So this is where I sold it. I still have Square on my TD Ameritrade account, so I still have a lot of shares with Square, even though I have sold it. But Square, I want to show you, show you guys on the 3-year chart, right? Square has been keeping this 20 EMA line. I don't like these two candles. You guys know what these two candles represent, right? This is a possible reversal back down, but at the same time, I can argue that we're still bouncing off the 20 EMA. So this is, again, something that we should wait and see as the days progress, but I am still in Square with a partial position in Square right now. That's it for this stock analysis. Like if you like this video, check out my content video. I talked about one ticker to watch in May that I posted last Friday. Yeah, happy trading week. Get some profits. Let me know what tickers you want to see, and I will see you tomorrow, Monday, for another stock analysis. I'll see you later.